Good day. It is Sunday, March 22nd, 2020. Thank you for joining us here on YouTube. Today we're going to talk about the short-term trend in the market, which is in a very unique position because it is exactly the flip side of where it was on February 19th, 2020 when we began going full short. Back on February 19, 2020, we wrote here at Seven Sentinels that um, the markets in the short term have produced new closing highs. The SPX has, but that is not joined, that is not confirmed by the New York Stock Exchange Composite, the Dow Jones Industrial Average, the Russell 2000, or the Dow Jones Transportation Average. Those all failed by significant margins to confirm that Standard & Poor's high of February 19th. Percentage of New York Stock Exchange issues that are bullish and those over their 50-day and 200-day moving averages also failed to make new highs. We laid that all out on graphic form. It's all on that report. And we said that at that time, this market is exhausted and it has produced more deep-seated and more universal negative divergences now than at any top in the last 40 years. Now even the 2-hourly and the 10-minute measures, as we see immediately, are scurrying towards universal downtrend signals. The line of least resistance sentinels are already in downtrend. Once the short-term sentinels join the daily and the 2-hour, we believe this rally phase will have ended. Major decline will be underway. This could happen as soon as, we said on February 19th, the first hour or two tomorrow morning, if the already weak breath goes negative. It did. We did. We got fully short then over the next day or two, and we stayed short until just a few days ago when we covered all our shorts, took our profits. We're up 50% year to date. But the reason we did that is because now we are in the exact opposite position. On March 20th, Friday, we got the flip side of what we had on February 19th, which was a top. Now we're seeing a short-term bottom in this market. Let's take a look at a number of indications of that. Each of the following was true on Friday, March 20, 2020, as the Standard & Poor's closed at a 2018-2020 low of just 2304.92. All of these things were true on Friday. We had the strongest breadth for any -4 Standard & Poor's down day in history. Anytime the Standard & Poor's has been down 4% in history, it has never had breadth as strong as we had on Friday, where 47% of all the issues rose on Friday. The McClellan Oscillator has come up 87 points off its low of just March 12th so far, of -138.92. That's an indication that momentum is now moving up. The VIX declined on Friday. This is the first time ever that the VIX has declined on any day that the Standard & Poor's has dropped 3% or more, ever in history, in the entirety of the Standard & Poor's 500. The New York Stock Exchange new lows were the fewest since early March. The NASDAQ new lows were the fewest since early March. The ratio of the Russell 2000 to Standard & Poor's 500 had its first uptick this week since March, and we have not had 2 consecutive days of negative breadth on the New York Stock Exchange in over a week. The McClellan Summation Index now is close to going positive. It'll take only 2,300 more net advances to take it positive. The New York Stock Exchange cumulative breadth did not make a new low on Friday. The Russell 2000 small cap index failed to make a new low on Friday. All of these, as the Standard & Poor's 500 made its new low for this whole 2.5 year period. And the NYSE, NASDAQ, Standard & Poor's 500, and the Dow Jones Industrial Average Bullish Percent indexes all more than tripled off their March 12th lows. So momentum has turned up. We're set to go. And the above list that I just read off would be just a sampling of hundreds, literally, of examples of how momentum has turned up in this market. If you had the patience and I had the time, we'd go through them all, but neither one of us have either. So again, we want to stress, make no mistake about this, this is a bear market. We are not talking about the bottom of the bear market. We're not talking about a new bull market. We're talking only about a short-term rally, but that short-term rally is now ready to get underway. All of these measures of momentum are telling us this. If we put aside everything that we just said in the last whatever it's been, 5, 6, 7 minutes, and just looked at one thing, we'd come to the same conclusion, and that is our 7 Sentinels LOLR, line of least resistance indicator. On February 20th, 2020, it went to sell, and that's where we began getting fully short over the next couple of days. It on Thursday, it stayed short through all of this move, and on Thursday it just finally gave its buy signal. We have now the buy signal for the short term, the opposite of the sell signal of February 19th. That's the bottom line, folks. It is time to cover shorts, get long. We are going to take our time to slowly ease into long positions as we get more and more confirmations that the move is actually underway, and we see confirmations of that. So again, we're up 50% year to date. We are now set to begin going long in the days ahead. We just wanted to make that clear to any that would want to know that. All of these articles, including an article entitled When Worlds Collide, another one called Rainmaker, another called Occam's Razor that we've talked about lately, another called Transformative Truth about 2020, all of which predicted this bear market, called out this bear market as it was developing. All of those are there for you to read free. Just click on that and they're available to everybody. You don't have to be a subscriber to get those. But speaking of subscriber, if you click on limited time trial, you can sign up for just $7 for 7 days and check us out. We hope you'll do that. And we want to again thank you for coming by today and listening to and watching this YouTube video. And we want to wish you good trading.